Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is January 6th. We're going to take a look at one out of the industrial sector here, Lockheed Martin. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I put out stock pick of the day videos Monday through Thursday whenever the market's open. We're taking a look at a stock that's pulled back, in this case Lockheed Martin, to see if it is presenting any undervaluation. We're going to take a look at my screener to see if it makes it onto my watch list. And there is the thanks button down below for those of you who are able. You can buy me a cup of tea. Click that down there if you want to help out the channel. That is one way to do it. And then just doing the other things, like I said, thumbs up, subscribe, hit the notification bell, and drop a comment down below. Let me know what you think of Lockheed Martin. Is it in your portfolio? Is it one you're watching? Is it one you're avoiding altogether? Now, this is the Vested Interest Stock Screener. This is how we will be going through the video here. We're going to run through this criteria. We'll see if it meets 5 of 8 to make it onto my watch list. And just because it makes it onto my watch list does not mean that I am investing in the company. It just means that I am interested in doing more of a deep dive into the financials of the company. And then when it makes it onto my watch list, I do make some time to do that. Exactly, looking at other things outside of this, such as revenue growth. I'm looking, are they buying back shares? Paying down debt, do they have more assets over liabilities? What do their PEG ratios look like? Price to sales, price to book, a lot of other information that I'm looking at. And if you're not willing to do that type of deep dive, you should probably not be investing in individual companies and stick to index funds or ETFs. And Warren Buffett would recommend something that tracks the S&P 500. So something like VOO, VOO, Vanguard's S&P 500 ETF. SPY is another one. There's several other ones out there that you could check out if you're not interested in doing that kind of deep dive into stocks. But let's get back to the video. And back to Lockheed Martin. Check them out on their homepage, www.lockheedmartin.com. That's www.lockheedmartin.com. That is their homepage where I pulled this information from. And they are a defense contractor out of the industrial sector. So they deal with governments, not only our American government, but governments around the world, and provide them materials and equipment, around air defense, land defense, sea, space, and cyber security. This is Air Force badge. I was actually in the Air Force back in the day. We specialize in defense tech, solving complex challenges, advancing scientific discovery, and delivering innovative solutions that help our customers keep people safe. So again, primary customer is governments, our government, and others, and they are a defense contractor providing, defense solutions, whether that's planes, missiles, or guidance systems, boats or guidance systems, sonar, space exploration, satellites, that sort of thing, and like I said, cybersecurity, which seems to be a more growing portion of all IT security. And again, check them out on their homepage. Now, the reason we are taking a look at them, down 3.28% on the day. We are talking about Lockheed Martin Corporation, ticker LMT, closed out the day at $466 even. Looks like they are up slightly in the after hours whenever I pull this information. 52-week range as low as $413.92. As high as $618.95, and they are within 15% of their 52-week low there, slightly. I think it was around 279 or somewhere around there, 269, somewhere around there. So just slightly less than their 52-week, or within their 52-week low. Let me see if I can. It's 413.92 times 1.15. Yeah, 476. So 476 or lower would be within 15% of their 52-week low. So they currently are. Market cap of $110.458 billion. So a large cap company here. Beta of 0.48, less volatile than the overall market. PE, price to earnings ratio, sitting at $16.88 per share. One of the rarest occurrences we see on this channel, I think, is when the earnings per share is higher than the PE. Their current earnings per share is much higher than their price to earnings at $27.61 per share. Earnings date is coming up here at the end of January, January 28th. Forward dividend, $13.20 paid out on the year. Divide by 4, though we will see that quarterly payout towards the end of the video, with a starting dividend yield right now at 2.74%. Ex-dividend date was December 2nd. Looks like they paid out on the 27th, so you would be in line for the next dividend if you were to buy them now, but you're going to have to wait a couple months to get it. 1-year target estimate, at least according to Yahoo Finance, $585.79. So they see quite a bit of upside potential here, at least according to Yahoo Finance and the price per share. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation. To do that, we look at their 5-year dividend yield average, 2.62%. We compare it to the current 2.74%, or over here where it says forward, 2.74%. And since their current, since their current dividend yield is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Now, their payout ratio is under the 75% or less that I look for at 45.60. Dropping down to their free cash flow, I like growing free cash flow over time, because typically if a company has growing free cash flow, it means they can do some things with that free cash flow. They can buy back shares, they can make acquisitions, reinvest back into the company, pay a dividend, increase that dividend over time, and we want all of them to be able to do all of those things. But here, looking at free cash flow, 2021 December it was 7.6 billion. December 2022 is down to 6.1. December 2023 looks like it was up slightly to 6.2, and the trailing 12 months, which does include all of 2024 now, is at 6.5 billion. So it looks like they were up last year, though we'll have to really wait to see if those are the final numbers or if they'll have any adjustments to it. Repurchase of capital shares is one of the other things they can do with free cash flow, and they are doing that. You can see here 4 billion repurchased in 2021. Even though it looks like there was a drop in free cash flow in 2022, there was a significant raise in the buyback of shares, so that can account for that drop there. Now this does look like a drop, right? They decreased their share repurchase to 6 billion in 2023, and their free cash flow only went up slightly. I'd have to do the math, but I don't think that a 1.9 billion in reduced repurchase of shares accounts for the 200 or the 100 or so million shares. They were less in 2023, so I don't believe their free cash flow is growing. Looks like they might have had a down year in 2023, or flat maybe. And the trailing 12 months, they repurchased 5.7 billion in shares. So they are aggressively repurchasing shares and taking them out of the market. Now, stockanalysis.com is another source I go to, not affiliated with stockanalysis.com or Yahoo Finance, just sources that I go to for information. And I do recommend more than one source for you to go to for information. Pick any sources that you like. I know there's a lot of them out there, Seeking Alpha, these two, several others. You pick any ones you want. Just, I would not blindly trust one. Sometimes the information is outdated. Sometimes it's just flat out wrong. So that's why I use more than one source. 11 analysts have taken a look at this. They call it a consensus buy. Low estimate of $515. And that's pretty close with what Yahoo Finance had it on the previous page. And they are currently lower than their lowest estimate. So if they came back up, that would represent a 10.52% increase from where they currently sit. Average estimate of $610.73. That would represent a 31.06% increase. And a high estimate of $700 would represent a 50.21% increase. All the while, you could collect that 2.7% dividend yield if you were to buy them now. Now, I like to look at statistics, look at return on equity and return on invested capital to see how well a company is reinvesting its funds back into itself. Again, that's making acquisitions, repurchasing shares, making bets on other companies, buying shares if that's what they're doing, shares of other companies if that's what they're doing, whatever their investments are, kind of looks at that. Return on equity is, and I like 10% or better for both of these. Now, return on equity is smoking high, 81.04%, extremely high. They are doing very well with their return on equity. Return on invested capital is a similar story, not quite as high, but still at 21.08%. Return on invested capital is over the 2 times the 10% that I'm looking for there. And EPS growth, I like 5% or better projected over the next 5 years. They are only sitting at 3.63%. So they don't get a check for that one. Revenue growth is projected to grow at 3.77% as well. All right, let's look at the dividend history on this one and wrap this one up. So there are quarterly payers. We mentioned payout ratio in the 40%, 47.71. I think this is a little bit higher than what Yahoo Finance had it. Either way, still well under 75%. Dividend growth is decent, single digits here, low single digits at 4.94%. Growth of 22 years. Buyback yield is positive 5.09%. You want to see buyback yield being positive, and you like to see a shareholder yield positive as well at 7.88%. They do pay out on the March, June, September, December timeframe like most companies do. And going back in time here, let's look at their dividend. They were paying on May 2022, $2.80. They raised that in November 2022 up to $3, raised it up again November 2023 up to $3.15. Most recent raise was that one in December 2024, the year we just left. and it was up to 330. So nice consistent dividend raises. Last one 15 cents. You know, that's a pretty good raise for the company. All right, let's check out the screener and see how this one looks. Understand the business. That's where you check. They're a defense contractor. That's what they do. Growing free cash flow. No, I believe they have the one down year in 2023. Growing dividend. Yes, it's growing. Payout about 4, not quite 5%. Dividend payout ratio is under 75%. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. And return on invested capital and return on equity are both over 10%, with return on equity over 80%. That was really high. 1, 2, 3, 4, 5, 6. It does make it onto my watch list. It's been on my watch list for a while now. This is one I owned a while back, wrote up a nice profit, and then sold it. And you know, it is one that I would be interested. Actually, I am kind of looking at this one, and HEIA is another one Warren Buffett just recently picked up that I'm interested in too as well in the defense sector. Let me know what you think of the company down in the comments section below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you would like me to cover in the Stock Pick of the Day video series, let me know in the comment section down below. I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in general educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.